So let's talk about a couple of commodities which seem to be hot, topical at the moment, and get your views. I know I have some views on them. So let's start with the uranium space. Uranium, everyone's talking about it. It's great expectations. Section 232. It's going to change everything. What do you think?
I am not optimistic about uranium at all. I'm actually very negative about uranium mining. And the problem is that if you look at discounted cash flow analysis of these uranium mining companies, and all you have to do is to go through the brokerage reports and don't have to waste much time on it. These brokers are using about 100% more higher uranium price than the uranium price is today, or even higher than 100% over the current spot price. So if the spot price is about 25, and if they are using $50 per pound of uranium or 60 pounds per pound of uranium in their analysis, and then if they suggest to you that the upside in owning those mining companies is 100%, my question to you is, why should you be investing in those mining companies? Why not just buy uranium commodity through, for example, Uranium Participation Corporation, for example? At least your downside is protected. And if uranium goes up by 100%, you will have made 100% as well, with your downside fully protected. So I am not at all interested in these mining companies. I like to value these mining companies using the spot price. I never go higher than the spot price when valuing these companies. And such valuation takes me to negative NPVs for most of these uranium mining companies.
Do you think there will be any winners?
There could be a couple of winners, but even those couple of winners, the big mining companies, the Kazakhstan uranium company and the Cameco, even they are overpriced because the assumption in the market is that the uranium price will go up by 100% or more than 100%. So for me, it makes absolutely no rational sense to invest in uranium mining today. You must wait for it to actually go up 100%. And if you really believe that uranium price will go up, just buy uranium. My suggestion actually is not to speculate in commodities. It does not work out because you and I have less information than actual buyer and supplier of uranium and these commodities. So leave that game to them, not to us.
Okay, no, that's interesting. So would your hypothesis there is that the market is not going to correct itself anytime soon. So a lot of these exploration uranium companies, where the uranium's still under the ground, they haven't got much cash to do much about it. And even if they did, it would cost them twice as much to mine it than they could possibly go and buy on a spot market where there's sort of large volumes sitting in warehouses. So do you think those uranium exploration companies are dead?
Well, they might not be dead, but your risk-adjusted probability of making money is extremely unfavorable. That's how I would put it. So if I roll a dice, I should bet on something which gives me 1/6 of my position. Now, if it gives me 1/100th of my position, then eventually I'm going to lose everything in a few rolls. So that's my problem with investing in those junior mining companies or uranium mining companies. The problem is that when I'm thinking about the future of a commodity price, for me, today's spot price is really the future price as well, because in my view, if there's a 50% chance of price moving up, there's also a 50% of chance of price moving down. So it really doesn't make much sense to speculate in future price of these commodities. We don't know how much uranium China is warehousing. And from what I know, China is warehousing a huge amount of uranium, which uranium bulls will fail to recognize or talk about.
No, okay. Well, it'd be interesting to see how that plays out over the coming months, and certainly with the announcement of the 232 decision for some of the US uranium companies. I guess that also answers my questions about your view of gold this year, because it's struggling to get it breaks through, occasionally breaks through 1300 and comes, straight back down again. So what does that tell you?
So, Matthew, I told you I don't like to speculate in commodities, but I think I know something about what's happening in the world that the rest of the world doesn't really understand.
An exclusive.
And that thing, absolutely. And this is what I was talking about initially, which is the implosion of the third world. This is going to bring a huge amount of instability in the world. And what you already see in the Western world is that growth has peaked for now. And this has peaked in a sense that you can't really invest for yields anymore, which means that a zero yielding asset called gold will become increasingly attractive for people. Also, the level of trust is falling in the Western society. And as level of trust falls in any society, people like to keep their money and their wealth in their own pockets, and gold gives them that access. I think the future of gold looks very good, of course, for all the wrong reasons, because the third world is imploding and the Western society has for now reached peak growth, which means that it will become increasingly attractive to keep your wealth in zero yielding asset classes.
And will it, obviously we're all investing, if you're dealing in equities, you're investing in shares, not a commodity, not a physical asset. You're still investing in equities, or are you buying gold, or are you buying ETFs, or what are you?
I mostly buy equities. So when I say that we have very likely reached peak growth, I'm talking about the general overall market. If you're able to identify specific companies that can give you a higher yield, you can invest in those companies for a yield. Because I do a lot of work on these companies, I like to invest as much as I can in equities, but I also like to keep a part of my wealth in gold.
Okay, interesting. And just to finish off on that, gold companies, you prefer exploration, development, or production?
Always exploration or development, and I don't like production companies actually, because these production companies tend to trade at a multiple of their NPV. When anything trades for higher than its NPV, it offers me an unfavorable risk reward situation.